Hello, hello, hello. I am jamesiajohnai, the wealth creator. I show people how to use other people's money to pay their mortgage, create cash flow, generate generational wealth, and protect their assets. So today, coming live to you on Facebook, some of you are watching me on YouTube. You will see this to talk about how to purchase, protect, and pass down property, right? How to purchase, protect, and pass down property. So a couple of weeks ago, maybe a month or so ago, there was a meme, however you pronounce that, going around on social media, don't lose grandmama's house, right? So this live today, we'll talk about and give some insight on how not to lose grandmama's house, how to become the grandmother or grandfather that leaves the legacy and passes things on. So I'm going to get right into it. If you want to have pen and paper, great. There is a link on this video, linkktr.ee/jamesiajohnai. I will be doing, or I am starting next Sunday, a free challenge for anybody interested in purchasing a property. Once we go through and talk about these things, there is a free challenge where I will break stuff down into more detail, right? So first 4 things we want to talk about when we are talking about purchasing, passing down, and protecting. One of the words that comes up is wealth creation, right? And the thing that comes with wealth is African Americans, and this is dear to me because I'm an African American. I'm open to working with any and everybody, don't get me wrong. We are trending to have a net worth of 0 by the year 2053. There's a saying that says 90% of millionaires own real estate, right? Land, some sort of property, home, etc. So us not understanding the home buying process, the importance of purchasing property, purchasing land, is preventing us from accumulating and passing down any type of wealth. But it gets deeper than that, right? So we're going to be focused on 4 things today. We're focused on the wealth foundation. So the foundation of wealth, the accumulation of wealth, the preservation of wealth, and distribution of wealth. And I love that word wealth because it seems like a lot of us are afraid of it, right? So when I think about myself, I am a licensed real estate agent in the state of Illinois. I am a licensed life insurance agent in the state of Illinois, North Carolina, Georgia, Alabama, Michigan, Indiana. May have left a few off. That's neither here nor there, right? But it's very important and they both tie in together. So how many people, if you're watching, comment if you've ever seen a wealth pyramid or a financial foundation pyramid, like a literal diagram of a pyramid that shows the foundation and how you build upon a foundation for financial stability, financial freedom, financial success. If you've seen a financial freedom pyramid or a wealth pyramid, do me a favor and comment yes. If you haven't, comment no. And I would encourage you to go and Google it to see for yourself, because you're going to see different ones, but they all are based on the same thing: protection, accumulation, distribution, and legacy. Starting with the foundation: protection, accumulation, distribution, and legacy, right? When we think about protection, and I'm not saying this, and that's why I want you all to Google financial foundation pyramids, wealth pyramids. This is not my words or something I just made up and came up with, because I am licensed in real estate and licensed in life insurance, right? Protection. First thing you need to protect is your life, your health, and any property that you have. The foundation, right? A lot of us are not leaving wealth behind. We're purchasing property. Don't get me wrong. We're purchasing property. We're not properly protecting, and therefore many of us are struggling to pass down. Not only that, we aren't building a proper foundation, right? We're not following the wealth pyramid, right? So a foundation, if I decide to build a house, I can go and lay some concrete and build a house, right? Or I can find some sand and just start building. Will I be able to build the house? Yes. But when it rains and something happens, my house will sink, right? You have to have a solid foundation. And this information is available to us via Google, YouTube, books. The information is out there. Thank you for the people that said yes, and thank you for the people who said no, right? There is no right or wrong answer. So your foundation is protection. What does protection look like? Protection looks like having life insurance. Protection looks like having health insurance. Protection looks like having disability insurance, right? Protection looks like having property and casualty insurance, right? So you think about it. I'm sorry, I'm a Jay-Z fan. I'm not even apologizing, right? He was like, nowadays, and I'm not promoting violence or anything like that. He's like, nowadays, I have to be mindful. I can't even, if I feel provoked, I can't hit somebody because they'll sue me. Why does he care about being sued? Because they're coming for his foundation, right? They're coming for your foundation. So I think about it. I was 5 years old. I was hit by a car. That was in 1985. Back then, car insurance was not mandatory, right? That's property and casualty insurance. Car insurance wasn't mandatory. My mom sued the woman, my mother sued the bus company who let me off the bus, right? But a part of that protection is protecting yourself against lawsuits. And we're going to talk about that and get into that more. Another part of protection in order to pass down anything is having wills in place, power of attorney in place, and trust in place, right? You have a pen and paper, you want to take notes, feel free. I'll recap and reiterate before I move on to the next. So we're talking about wealth foundation, 1, wealth accumulation, 2, wealth preservation, 3, wealth distribution, 4. But focusing really on the foundation, and I'm going to get into how to purchase property, and I promise we won't be here that long, right? So we're focused on protection, accumulation, distribution, and leaving a legacy, right? My great-grandfather left a legacy. My great-grandfather left over 40 acres. We still have it in the family. I can go down on my family land. I can put a trailer on my family land. We can grow things on our family land. And he was able to do that being born in, if my grandmother was born in, my great-grandfather was born in 1910. He was born in 1910 and he left a legacy. He was born in 1910, he died in 1957. He has left a legacy that has continued for over 50 years, right? So it's possible. It's very much so possible. So that foundation, life insurance, health insurance, property and casualty insurance, wills, trust, power of attorney. Those are things that when we become adults, we start working, we're making money, we need to have, prepare for, plan for, and properly allocate for, right? It's great to have the car, paying the $500, $600, $700, $800 a month car note, along with the $100 to $200 a month car insurance. Great. You have this vehicle is taking you back and forth to work, which helps you make money, but are you protected? Do you have life insurance? Do you have health insurance, right? Because many small business owners and entrepreneurs, we may not have health insurance saying, oh, health insurance is too expensive. Are you protected? And yes, this goes into purchasing property, because before you purchase real estate, we have to get the foundation solid. So if your foundation is not solid, if you are out of order, let's start to build that foundation now, right? So once you get past protection, the next step in your financial pyramid, the next step above your foundation is savings, right? When COVID-19 happened, this pandemic that we're experiencing, people flipping out, oh my gosh, you need a higher credit score. You have to have more money in reserves to purchase a property. Yes, they're literally saying have your finances in order, have a solid financial foundation, right? There is nothing wrong with the programs that were out there lending as low as a 580 credit score, but oftentimes that means that a person actually needs to have more money, right? So for them to say have better credit, have more money saved, have an emergency fund just in case, they're trying to help us once we purchase, protect, so that we can pass down. Right? So many people are going to experience foreclosures at this time. So many people. And if you all are commenting, I am so sorry, I cannot see them. And that sometimes happens when I'm live on Facebook. So I promise if you're commenting, I'm not ignoring you. And I appreciate you for being here, right? So to properly purchase, protect, and pass down, foundation, insurance, right? And feel free to comment, ask questions, whatever. Foundation, protection, Protection includes life insurance, health insurance, disability insurance, property and casualty insurance, having a will, having a trust, having power of attorney. Then you go to savings, right? Or the savings, right? Savings includes home ownership, short-term savings, long-term savings, retirement planning. So when we think about purchasing, the basic things that you need to do, right? Really quickly, the basic things that you need to do if you're thinking about purchasing a property, the first thing you need to do is do your budget. One of the best ways to estimate how much mortgage you can afford is if you're able right now and you're paying rent, if your rent is $1,000, $1,200, $1,400, $1,600, $1,800, $2,000. If you are successfully paying your rent, managing your rent payments, stay somewhere around that monthly payment or a little lower for your principal, interest, taxes, and insurance payment. It's called a PITC payment, right? That way you know it's something you can handle. But one of the first things you want to do is start saving money. I posted what would people choose to purchase a single family home, a 2-flat, a multi-unit, 3 or 4 unit, or fix and flip. A lot of people mention multi-unit. Purchasing a multi-unit of 3 units or 4 units, right, staying in the residential space, requires reserves. Some lenders require anywhere from 3 to 6 months of mortgage payments and reserves outside of your down payment, outside of your closing costs. Now, some lenders are requiring 6 to 12 months of reserves to purchase a multi-unit. That means if the multi-unit mortgage is $2,000, you need anywhere between $6,000 and $24,000 sitting in an account. Now, that account could be a life insurance policy that grows cash value. The lender will consider up to 60% of the cash value in your life insurance policy, or you can pull the money from the cash value of your life insurance policy once you talk to your life insurance agent, the life insurance company, to make sure your withdrawal of funds will not impact your protection now or in the future, right? Do your due diligence. You can get the money from there, or you can use up to, I think they take into consideration 60% of your 401k. Why are they doing that? Because the 401k fluctuates. Worst thing that you would want to happen is to be purchasing a home. You use your 401k. COVID hits, you're ready to go to the closing table, and you realize that you've lost money in your 401k. And now you don't have the reserves to purchase to close, right? But you can use your life insurance policy. You can use your 401k. You can use savings, bonds, wherever you have money and assets allocated that the bank recognizes, right? Everybody good? You with me? You okay? I hope so, right? So taking that into consideration, that savings, having that foundation, but that brings in, again, having those insurances and having those savings, right? And then the next step in the financial foundation is growth, and the other one is risk. So in savings, it's home ownership. I'm buying a single family home up to a 4-unit. When we talk about risk, now we're talking about real estate investing, multi-unit properties. Now I'm a real estate investor. I'm going to own and hold multiple properties, right? But a lot of times people are starting out with, I don't have a foundation. I want to buy a home. Then something like COVID-19 happens, or a layoff happens, or an illness hits. And because the foundation wasn't there, the life insurance, the health insurance, the property and casualty insurance, the will, power of attorney, the trust aren't in place, now we're looking at foreclosure, right? 2/3 of bankruptcies are due to medical debt. The majority of foreclosures are due to disability. That means that something happened to me and I didn't have the proper protections in place to cover me when something happened, to ensure I'm able to keep my home, to keep my properties, right? There's something that says for an investor, every real estate piece of property that you own, it should be attached to its own LLC. Why? For protection. If you purchase every property under your name and it's attached to you, and an LLC is not going to completely protect you, but if ABC LLC owns property A, DEF owns property B, when somebody sues ABC company, they're only putting a lien on that property. But I've seen it. People own multiple properties. They face a lawsuit. All the properties are in their name. There's a lien on every property. And so that lien is fulfilled. Purchase, protect, pass down. Protection is very important. Protection is the foundation. Protection comes before purchasing. Making sure you have life insurance, health insurance, property and casualty insurance. Your lender will not give a clear to close on the purchase of a home without securing homeowner insurance. They will not. A lender will not. You will not get a clear to close as a buyer if you do not secure and provide proof of homeowner insurance. Once you provide proof of homeowner's insurance for a property you haven't even closed on and don't have the keys to, then you get a clear to close. Then you go to the closing table and now you walk away with the keys. Why? The bank is ensuring that their asset is protected. It's your home when you leave the table, but they've lent you money for the home. I lend you $300,000 for this home. No homeowner's insurance is in place. You close and the home burns down. You still owe the lender $300,000. But Jamesia, the house is gone. Lender doesn't care. The lender loaned you $300,000. You still owe the $300,000 even if the home burns to the ground. But when you have homeowners insurance, property and casualty insurance in place, you pay your deductible, and the homeowners insurance company, they don't want to, they're going to make you whole and give you that money so now you can pay off the lender and figure something else out, right? When the last time I bought a car, they didn't want me to drive off the lot without car insurance. The protection has to be there. If you're financing and asking a lender for money for a home or for a car, you cannot get the keys to the house without having the insurance. You cannot get the keys to the car without having the insurance and showing proof of the insurance. Now, if you're fool enough to cancel it the next day, that's on you, but that should tell us something. We buy cell phones. Do you want insurance? You buy a TV. Do you want insurance? People buy diamond wedding rings and earrings and expensive jewelry. Do you want to insure it? What are you insuring it for? In case something happens, what might happen? Somebody might steal it. You might lose it, right? Protection and purchase go hands in hand, right? And that's how you're able to pass down. So I said we're going to talk about how to purchase, protect, and pass down. The house who purchases right now, credit scores need to be at about a 660 for most lenders. Right? The FHA 620 has increased. So I'll say on average, your credit score needs to be a 660. You need to have money saved. You should think about having anywhere from $5,000 to $25,000 cash value in your life insurance, your 401k, your IRA, your 403b, your savings account, your CD, your high yield savings, your money market account, somewhere that you can access. The more liquid, the better, the less volatile or risky and attached to the stock market, the better for your sake if something happens. Credit has to be there. The credit has to be there. The money needs to be there. There are home ownership classes that you can take to get a certificate to understand home ownership and property ownership. A lot of people mention purchasing multi-units. Understand when I tell you, if you do not understand the Chicago landlord-tenant ordinance or the landlord-tenant ordinance in the city, county, municipality, state that you live in, and a savvy tenant moves in, they will run circles around you. You need to understand property management because you are managing your property to make sure that you are protected in doing what is legal and ethical when it comes to your tenants, right? Again, making sure those protections are in place. The foundation for anything is having proper protection. People have lost properties from being sued because something happened and somebody failed. And this is not to discourage anybody from buying. So when you're thinking about purchasing, credit score matters. Having funds, there will be, you'll pay earnest money. You pay for an inspection. You pay for an appraisal. You may need to do multiple inspections. So you need money to allocate for that. You need money allocated for your down payment. You need money allocated for your closing costs. You need money allocated for your reserves. So thinking anywhere between $5,000 to $25,000, the more the better, right? So you need your credit and your savings. That's basically the main thing when it comes to purchasing. The two things that matter the most, the mindset goes in there as well. But credit and capital, CNC, credit and capital. And then when you purchase this property, right, you're not allowed to leave the closing table without insuring the home. There are homeowners insurance policies that have a rider that say if something happens to you, the insurance company will pay off the mortgage. Why is that important? That's the only way to pass it down. If something happens to me and I own 10 properties that are mortgaged that I may owe people on, if I don't have enough life insurance, cash, capital, savings, stocks, bonds to cover all of that debt, I'm not passing that property down to my wife or my children or my husband. Nieces, nephews, whatever have you. Right? So we go out and we buy a $200,000 home, a $300,000 home. We have homeowners insurance. We have life insurance on our job that's about $50,000. If something happens to us, how is this home paid off? How is the home maintained? How is the building paid off? How is the building maintained? That is one of the ways where term life insurance comes into place. Right now, if I went out and purchased a $500,000 property, I could look into getting a $500,000 term insurance policy for 15 years, the length of my mortgage, or 30 years, the length of my mortgage, and pay less than $100 a month to ensure that if something happens to me while this property is mortgaged, the insurance claim would pay off the property, right? But then going back to that foundation, because we're talking about passing it down, I want to make sure that I have a will and a trust established, right? So there is something out there about John D. Rockefeller versus Vanderbilt. John D. Rockefeller died almost 100 years ago, if not longer. His legacy lives on. His family has been overfunding whole life insurance policies for years, but on top of that, John D. Rockefeller had a trust established that said, when I die, this is what happens to this money, this is what happens to this property, and this is how this thing is going to go. My great-grandfather had a will established, a trust established. This is a family home, this is family land, this land and this home cannot be sold, ever. It will pass down from generation to generation to generation. Each of my children has so many acres. And as their family grows, those are the same acres that their children and their children's children and their children's children have. So my grandfather purchased, protected, and passed down. So John D. Rockefeller had a trust established, had some life insurance policies overfunding, some things in place that specifically allocated once he purchased how to protect, pass down, and preserve wealth. The trust is still paying out to his family members to this day. Vanderbilt, on the other hand, both men amassed wealth in the late 1800s, early 1900s. He left his wealth to his child, right? No trust in place, no specific instructions, because when we're talking about passing down, you have to get specific, right? No specific instructions. His wealth lasted 3 generations. So it was him, his child, his grandchild, wealth gone. So having that foundation, having the wills in place, the trust in place, the insurance in place. If you are watching this and you own a home, you own a property, you're married, you have children, connect with me. I can connect you to the appropriate people that can help you establish the proper foundation when it comes to life insurance, wills, trust, power of attorney, and the other things that you need to have in place if you have minor children. Even if you have adult children. If something were to happen to you, who's speaking for you at the hospital? If you can't speak for yourself, right? because it's not enough. A lot of our people and people build this wealth. They build these empires. They make this money. They buy this property, and they don't instill in their children the values that they should have and the things that they need to do. They leave it to their kids, right? Second generation inheritors, many of them, most of them, I'll say some, right, do not continue the wealth and preserve it. That's why you have people like Bill Gates saying, I'm not leaving my kids anything. They can work just like I did. There are wealthy people that are adamant, I'm not leaving my children anything. Nothing wrong with leaving your kids something. If you're going to leave it to your children, make sure they understand what to do with it, how to preserve it, and to continue to pass it down so that it is a legacy. One of the ways to do that is to establish a trust and have that trust very specific and very, very specific, very tight. So it can be 100 years later, and whatever you built is still providing for future generations. That's how we create wealth, right? So starting with that proper foundation, life insurance, health insurance, wills, trust, property and casualty insurance are key. Someone asked me, how do people have these $1 million life insurance policies? You can get about $1 million of term life insurance if you're under 55 years old for little to no money. And if something happens to you, now you've left a tax-free benefit to your heirs, right? So I am jamesiajohnai, the wealth creator. I show people how to use other people's money to pay their mortgage, create cash flow, generate generational wealth, and protect their assets. This is a topic I could go on and on and on about. If you would like to connect with me, there is a link that you can find in the title of this video. It is linkktr.ee / and then my name, jamesiajohnai, jamesiajohnai. I am starting on Sunday a free challenge. It's a free challenge, home buying challenge. If you have any interest in purchasing property, I'm going to break down the home buying process step by step. Every day there will be a live video, even if it's 2 minutes, 5 minutes, 10 minutes. None of them will be more than 15 minutes. We're going to go through each step, starting with the proper foundation that one needs to have, all the way up to earnest money, choosing a home, appraisal, inspection, closing, what some of the terms and the words mean. If you or someone you know, so feel free, like this video, love this video, share the video. If you're watching on YouTube and you haven't subscribed, please subscribe to my YouTube video and leave a comment. If you are watching this video live on Facebook, do me a favor, like the video, love the video, share the video, leave a comment, connect with me. I would love to work with you and assist you in the Chicagoland area with your home buying needs, as well as your life insurance needs. And we also do have relationships with individuals that can help you with your wills and trust as well. So when it comes to establishing your proper foundation, I am your go-to if you so choose. And when it comes to purchasing a property, I am also your go-to, right? Hey, Elena, thank you so much. I completely lead by education. I will walk you step by step through the process, understanding that we don't know what we don't know, and also understanding that we have the ability and the power to change our financial situation, economic situation, and a lot of it starts with properly protecting and making sure we're building from the foundation, and we're building a solid foundation up. And even if you're somewhere and you started out of order, it's not too late to go back and build that foundation, right? So I am jamesiajohnai. Visit the Linktree link if you are interested in joining the challenge. You'll see it's the first option on the link to join the challenge. You put in your email and a little information, and you will receive all of the handouts. So I'm sending out all the handouts. The step-by-step guide will be emailed out to everybody on May 31st. And then those that choose to participate, there will be live videos. They will be on YouTube, but there'll be an exclusive link, so it won't be open to everybody. It'll be webinar style and on YouTube, but it will be private. But everybody who registers will have access to that as well. I am jamesiajohnai, the Wealth Creator. Have a great day. Again, like the video, love the video, share the video, set alerts for the lives, subscribe to my YouTube channel. Have an awesome, awesome Memorial Day.